So it's going now. And then I'm going to switch over. So I'm officially live. You guys can kick off your live side of it. And we'll get into this. So let everybody kind of get their stuff going. Welcome everybody that is watching the live stream. I'm trying to get to where you guys can see everybody's beautiful faces on my Zoom here. It's just all whited out. And I'll fix that when we go to switch to a different screen here. But I want to welcome everybody that's able to see this live stream. Hopefully we'll be able to see some chats here soon. And the point of this meeting, we have several awesome community members on YouTube, folks on the mining community, and of course, folks that are in the space when it comes to mining. And the point of this call is to talk through and just have a genuine, like, fireside style chat on EIP-1559, in addition to other topics that are around the subject of mining, Ethereum, ASIC resistance or not, and just a general conversation to allow some feedback from obviously the folks that are on the call, and then folks from the community that I'm going to be polling, and then extracting the data from the live chat to have the quote unquote mining voice as a representative for the Ethereum cat herders meeting that is going on this coming Friday. I just didn't want to go there in a vacuum. I wanted to make sure that everybody has, some piece to say, if it's opinion, if it's their own data, whatever. I wanted to have that form to where we're a collective community. And then who knows, like if the community really likes this, maybe there might be like a biannual meeting or something, or a monthly meeting that we can all kind of get a few of the folks together and just talk about different issues in the space. I think it's always good to have multiple feedback on the same forum. So what we're going to do real quick is just kind of let everybody introduce themselves, since you guys can't see my screen of all the different people. And if as you're introducing yourself, let people know, one, your channel, and two, if you're actually streaming on your side too, so then people can see, look at it from a different perspective. We'll start at the top from the way I'm looking at the participant, Matthew Hopkins first.
I use my real name. There you go.
Yeah, there you go.
Sons, it's blind. So my name is Matthew. I run the YouTube channel Son of a Tech, which covers cryptocurrency mining and general tech. And I've been watching Bits for years now, so it's an honor to be here with all y'all, and we can sit down and figure out what's going on.
Awesome. Looks like Red Panda's next, my dude.
Oh, hey guys. Yeah, Red Panda Mining here. You guys know I've been here. I've just been making YouTube videos now since 2018, but it wouldn't have been possible if I haven't been watching, BBT, Son of a Tech. I Mine Blocks is here. I'm humbled to be in awe just to be in your guys' presence. So thank you guys for letting me be here and participate with you guys.
For sure, my dude. Awesome. Yeah, right after that, it looks like Lee from My Mine Blocks is next.
Okay, so it's me. So Lee here from I Mine Blocks, and obviously from the UK. I think most of you other guys are from the US, so that makes me a little bit different. I've run a YouTube channel for, quite a few years now. I think 2016 or something like that. I think when I started putting out content on YouTube, and then I've kind of been quite lazy recently. Just mostly been working on a lot of other things rather than mining so much of a focus. So quite heavy in Ethereum and also DeFi and stuff like that, moving a little bit away from mining. But I still am mining. I just haven't been able to make as much content with other things going on at home and stuff like that. But that's me. And obviously, I Mine Blogs is the YouTube channel if you guys want to check it out.
Awesome. Let's see here. Who's next? I'm going to fix the video too after this, guys, after we do the introductions. Nemesis. Or no, sorry. It's Nemesis. Yep. Go ahead.
All right. I'm Nemesis from Crypto and Hot Rods. I'm also streaming on my channel too right now. I've been in this space since the beginning of 2018, so I watched Bitcoin just take that polar plunge, and it just gave me the opportunity to do my research and everything like that instead of being all hyped up in FOMO mode like a lot of people are today with Bitcoin, trying to tickle $60,000. It's like I started off watching BitsBeTrippin, I Mind Blocks, Mind Your Biz. So I mean, it's like a lot of you guys are the reasons why I got involved with mining. It's like coming from the whole car realm. Anything that I can build, or it's like I understand electronics out of cars. So when you guys started talking about setting up mining rigs, it kind of hit on to my whole builder mindset and the ability to understand hardware itself. So I kind of just went down that rabbit hole. And then whenever I got started, I realized there really just wasn't a whole lot of people putting out content to show how to get started mining. So it was just more, I started up my channel more to document what the hell I was doing. So whenever I would do something wrong, I can go back to my video and go, that's what I forgot. Damn it.
Yeah, it's good stuff, buddy.
Yeah.
Let's get into Mind Your Biz next, buddy.
Hey, thanks first off for having me on the stream. It's really an honor and a privilege to be with this group of gentlemen. Everyone here has definitely done so much good for the mining scene. So let me be the first in the introductions to just prompt anyone who's watching the stream, go out of your way, check out the participants in this live stream, hit those subs.
Sure.
A lot of them are very earned. Some of them are still not as popular as they should be. Just in my opinion, mining isn't just the gateway or the onboarding system to crypto. It is crypto. Proof of work is the main event, right? So I think it's kind of, I guess maybe I'm still perturbed. We're in this new bull run, and we've got channels that are hitting 500,000 subs. Not one of them is a mining channel. I'd love to see that change, but
For sure.
Here. Seth Estrada is the name. Run the website, mindyour.biz. The YouTube channel is a bit of an appendage to that right now, and highly focused. I've really taken a big turn in my content from strictly proof of work into user data privacy and just being a better custodian of cryptocurrencies. We can't onboard new users until they know how to keep secrets properly and not get wrecked, being their own custodians of crypto. So, but proof of work is
awesome.
It's the main event, right? Cryptocurrencies, digital currencies didn't work until proof of work.
For sure. Thanks for that, Seth. And it looks like we got Crypto Michael.
What is going on, everybody? Thanks for having me. Crypto Michael. I am currently streaming on DCA Adventure. Have my own channel as well, Crypto Michael. So yeah, appreciate everybody here for showing up and putting in your thoughts, your two cents, you may say, on this particular subject, as we're all miners and community members in this very niche but tight-knit community. It's great to be here. Thank you all. It's been a pleasure growing up watching all of y'all as a sense. Got in around 2018, watching BBT, Animations vlogs, watching all of y'all just kind of getting up into kind of how I feel about the situations in particular. Everybody's opinion matters, and everybody's opinion is different, and that's what makes it so great. So thanks for having me. Appreciate it.
For sure. Welcome, man. It's good to see you here too. It looks like we got David next.
Oh, you can hear me.
Yeah.
My name is David Stanfill. I'm a GPU hardware developer engineer. I've been operating mines for quite some time, going back 2015, 16, and using also a lot of GPU and other hardware for non-mining purposes. My main involvement here is really I don't have a YouTube channel to pimp, so nothing to watch there, but my main involvement here is to be a technical point of reference. And then I do have a passion for trying to bridge minor concerns with the rest of the development community and the rest of the Ethereum development community, because I feel like miners are also often a marginalized group in those discussions. And with the technical background, usually I can help bridge that a little bit. So that's why I'm here.
Awesome, David. Thank you. And it's GPU Hoarder, right? For folks that are,
Yes,
yeah.
that is the moniker.
Yep. Awesome. And Max.
Okay. Well, I'm been here about a hot minute in this community compared to everybody else. So I grew up in this community watching all of y'all. So I appreciate all the input that you guys had given. But I started mining in 2019 when I built a computer for my daughter, and we started the journey together. And so that's kind of how we got started.
Awesome.
And as we all know, it just kind of draws you in. In the last couple months, though, I've been out of work, so I've been heavily researching 1559, both sides, kind of the same motivation that David mentioned, although we had a conversation last night actually on one of the Discord channels. But at any rate, it's been an interesting, been learning along the way. It's been like a fire hose learning it all. So, but definitely want to see both sides of this and trying to get everybody to understand both sides and eliminate as much misinformation on both sides as well.
Absolutely. And glad to have you, man.
Thanks.
Awesome. Also, we got Mining Chamber. We got a couple more. We got Mining Chamber, Serpent, and Wes left here. So let's get Mining Chamber.
Awesome. Can you guys hear me? Came in a little bit late. Hopefully.
Yeah.
Awesome.
We got you.
Perfect. So yeah, my name is So, and I run the channel Mining Chamber. I've got into mining in around like 2019, I would say, end of 2019. So it hasn't been that long at all. And honestly, it's great. I've been loving it, and it's a pleasure being with you guys here and learning from you guys. And you're all like at the top of it and very knowledgeable, which is amazing. So it's awesome being part of the community. I really love it.
Awesome. Yeah, you've gotten some pretty good content out there, really, man. So good job there. Yeah. Let's see here. We got Serpent.
So my name's Vega. The channel is Serpent X Special Forces. I am live streaming currently at the moment. I've been in mining for quite some time, but I didn't really start emphasizing it on my channel till early 2017. Mostly a hardware type of guy, like Nemesis, but I like to dabble in a little bit of everything. So I'm an IT specialist here in North Florida, and been communicating and watching most of you and trying to help out. My goal is to share as much data as possible, so that way the community can make an informed decision, help educate and help grow this community.
Excellent. Thanks, buddy. And let's finish her up with Wes on who's on the stream right now.
Hey, thank you. My name's Wes, not your normal miner. First of all, just want to say thanks for putting this together and having everybody. Been around since late 2017, early 2018, watching people like Vosscoin, BBT, Son of a Tech, Cursed Mining, Brandon Coin, all these guys got me into it. But our channel's basically just been my journey from the start to finish. And we are now currently working in a GPU mining farm. So we've just been taking you from start to finish there, and very excited to be here. So thank you.
Awesome. Yeah, it was great. It was good that you guys got to, go through, your participation when you guys first got on and that sort of thing. I mean, it's, let me switch my source here back over real quick. I went ahead and made a quick little pivot here to make sure that you guys could be on screen there because Zoom was not working. There we go. So, I mean, the main point of this today, obviously, we have there's a development/community call on Friday this week coming up, and I was asked to participate in that and then just provide, be one of, I think, 3 minor participants. There's a pool. I think F2 Pool is going to be on there, and there's another individual that's going to be on there from the mining perspective. And to provide kind of some feedback of what are the impacts that we're seeing, or why are we against, and why has this effort went out with a lot of the mining pools that are not flagging for this update, and to give everybody an understanding, whenever a new set of code is going to be deployed onto a blockchain cryptocurrency network, you have nodes that have to have their clients ready, or you have nodes that have to be ready for it. You have to have clients that have the code ready to activate, and you have to have miners that are going to be mining the correct chain, which means that they're going to be, making blocks for the next, the next update here. So when you have pools, which are proxies in front of that are not going to activate that, you're going to create effectively a hard fork, and it's going to cause a chain split. So there's some concern, obviously, from the development community that a majority of the mining pools out there, which I believe has a website organized to that by, it was at Flexpool, I believe, that's done that, which is stopeip.1559.org, I believe is the thing. And there's also now corresponding other flip side of it to, almost kind of like a congressional thing where it has both sides of the ticket, right? Out there with the pros of it. And, this is kind of like an earmarked package of things that are in EIP 1559. It's not just about burning fees. But I think before we get into our bigger discussion, I'll do a quick overview of what 1559 is for everybody to understand what's going to happen. Why are all these miners right now on a channel and looking to hear our perspective? Why are we kind of against it? Or, is there misconceptions or any of that? So the main reason why we're all together right now is Ethereum, and you've seen this in probably a lot of people's videos, has a block reward, just like all other cryptocurrency blockchains that are proof of work. And then it adds the transaction fees that happen within that block time, usually rank order sorted by highest fee first, right? So there can only be so much that goes into that box. You take the free reward, and then you take the total transaction, you sum those up, and then there's a third fee that has to do with orphan inclusion, and then that gets added, and then we share that as part of the incentive package when we're mining. 1559 is going to move to a place to where that transaction fee is burned, and we are going to get a base flat, the reward rate plus a miner tip. That's a new thing off to the right of it. And we, there's not a lot of data of how that's going to play out with the miner tip. There's been some models out there, and it isn't, the few models that are out there are not showing that that's going to be any large substantial amount yet, but we don't know, right? Until it happens, we don't know what that's going to be. So a lot of the data and the premise around this is going to have an immediate bottom line effect on people that are participating. And that's part of the rationale of the risk. I'll switch over real quick to the screen to show kind of a thread that lists the benefits to show that other side of it. And then we can get into some discussion here between everybody. So hopefully you guys can see this. So I wanted to make sure I provided a perspective from the development community and what their view that is coming with 1559 is quote unquote the benefit for people. So more predictable fees, reducing overpayment, and an ability to create a better UX experience. So UX is the user experience when they're going into like a wallet, and then how it will predict what fee you pay. And anybody that's been using Ethereum knows that that's a good thing, because there's a good chance that you went and submitted that transaction, and if you didn't have enough, it's sitting out there for perpetually forever. If I've seen some people send with zero fee or just a little bit of a fee, and their transaction's still stuck after like 9 months. So any way to predict a better ratio there obviously is a good thing. Removes an incentive for reorgs in a heavy fee-based environment. Cements privacy of ETH with a base fee. One cost of economic abstraction from the MEV, which I'll explain in a minute kind of where that is. There's minor extractable value is MEV. And there's some instances where people are paying for their fees using other tokens that are on the chain, using some interesting dynamics that can be set up. And then you will allow in protocol congestion Oracle, which I don't have a ton of data on that. So we'll get anything that we cannot represent as this group. An explanation of this will be represented on Friday at the ETH development team, where they're going to be pitching the benefits in a lot more clear detail. This is really going to be around just the miners' perspective right now. So understand, if you're watching this and you're an ETH participant and you're just triggered, like, bros, we're not trying to not let you have a voice. That is on Friday. This is mostly going to be centered around where we have direct impact as miners. And then the last one here, it looks like he has a number 5 here. Base fee burns enables a net zero, positively negative issuance. This is what's been really posed by a lot of the other channels out there. Some of those channels that have a 500,000, as Seth said, from the market view perspective, where a supply possibly gets into a reduction inflation rate, where there's going to be enough of the fees burned to where the inflation of the 2 coins per block are actually getting outweighed by the burn of the 2+ cost of fees that are as part of the transactions that are getting burned. So now instead of 4 moving around the system, it's actually deflating that. Like in that case, it would be like 0.5 ETH per block, right? So now there's creating a deflationary action in ETH, even though I have a couple of videos. I know other people have a couple of videos that ETH will inflate forever, so it doesn't have an upper limit. So it's a hard argument to make. It's a short-term thing. It's not a long-term argument there. But those are kind of the top perspectives, and we can dive a little further in there. But I'm going to switch back to the community and just really open up in the beginning. Let's talk more around more of a personal experience of how does this affect you? What's your position? And we'll allow people to kind of just a little free. I'm not going to just run down the list, but I will call folks out if they feel like they haven't said anything yet, and I'll just kind of open up the floor from a perspective of kind of where you stand as a miner right now on it. And try to keep them real quick. That way we're not going real long, just where you stand. I'll let you guys kind of self-organize this.
So I've already done a video on it. I think some things have changed. I'm here to kind of get your perspective and obviously everybody else's perspective on it as a whole. There are always worries when you start talking about burning fees and so on. I'm kind of interested what if that moves over actually into ETH 2.0 and proof of stake. So not more from a miner perspective for me actually at this point, because I do see the issue with inconsistent fees. And that's because I do utilize a lot of swapping and so on with Uniswap and DeFi in general or whatever. But my question is it a valid solution, and is it even worth doing it on ETH1 in its current state?
Yeah, I think it's actually a real good question, Sonatech there. And part of that argument out there is if the roadmap is where it's at, where we already have Beacon Chain alive, and for people that aren't tracking, Ethereum has effectively ETH2 stood up in the capacity of let me switch over to this real quick. Where ETH2 has it in a perspective of they got Beacon Chain on, people have staked interest out there, and there's actually people earning money on that staked coin right now. What happens with regard, like if that's already the case, why are we even playing with this right now? And does the risk and change or the animosity that's being occurred right now from the community worth all of this effort for possibly a UX adjustment or a change? And can this be separated to where we don't need the fee burn? However, you can inherit some of these other effects. I know that there's a couple attack vectors that they brought up that if you don't do the fee, it can be gamed a little more. But again, a lot of this stuff is built on models and not the reality of the way things work. And I mean, that's more of an existential issue in general in society. We rely on so many models, and when things actually play out, the 1%, 2% opportunities that could happen usually don't happen. I mean, we would see a lot of this already going on in other proof of work networks that are not messing with the monetary policy. But yeah, from your perspective, is it really worth doing this when you have such a leading indicator that we're going to be moving to proof of stake finally? As they work through some of the more details. I think that's a good valid point in perspective there, if we should or not, which I believe is it worth the time or not? Probably not. But I don't know if that really answered what you were saying there, but I'm going to switch over
we're on
to.
the same page. I guess that's just the question when you get there. Like, is it worth it with, you know, ETH 2.0 come down the line? I am curious as well on if they've come up with an actual fee cap, because I didn't see anything yet on that.
Yep.
Or what that.
I didn't either. And if I'm not mistaken, it doesn't really decrease the fee. Like the fee's still gonna, you know, could still be just as high. So
Correct.
as like a mining standpoint,
Well, isn't there?
it's kind of a
There is
bummer.
fee cap still, though, right? Or it
I
rotates.
think, what was it?
The fee's still there.
What, 20%? Plus it can fluctuate. I think
Correct.
that's what it was. It can fluctuate 20%.
It's gonna make it. It's gonna
up or
make it
down.
more predictable. It's gonna make it more predictable based off the previous block.
Yeah, which means people are not going to be YOLOing high fees to try to make sure that their transaction's there. You're going to have a better calculation, and you might not have to overpay for some stuff. But even if we took the max of that 20% on a current ETH block set up with transaction fees, like right now it's like 4.1. I think cost per block right now on plus the 2 on the mine, or, you know, it's 4 in totality. So it's like 2.1 right now. So let's say it went down 20% and we're at like 1.8, 1.6 now as the average transaction fee. You know, I think that's if every time it worked out like that, we would still have, you know, that much being burned. It does. It doesn't change the dynamics of the people paying fees. The thing I haven't seen, and I'm looking forward to hearing from a pool, is when pools go to form the block, and they're trying to make it the most value for us as miners, right? So they're order sorting based on fee. By and large, that's what's going on. There are some interesting dynamics that can play with pools that are censoring transactions, or they can censor transactions, i.e. if they see the endpoint coming from somewhere like Iran and they're like, you know what, I'm not going to include that transaction because I don't want to get a knock from the US government on my door. So then they may ignore that high fee in that type of instance. But by and large, most of it's order sorted by fee. And then that's what's included in the box, you know, or in the block, trying to provide us the most value, right? Because if they weren't order sorting that way and you're just good.
Yeah, so that was going to be my question from a pool perspective. Is it going to be the case where you want to prioritize base fee over anything else to reduce the amount of fees burned? I know that's a concern, right?
Correct.
Yeah, they'll be sorting based upon the miner tip once 1559 goes into place, not based on base fee at all.
But they're going to want to keep it as close to base fee. That miner tip needs to be as low as possible. That's the concern that Ethereum as a network has.
Correct. It falls in an order sort in that way. Otherwise, you would have this weird thing to where there wouldn't be a lot of transaction fee, but there'd be a high miner fee. I think it's going to be a kind of both. We're going to have a high base, high base fee, maybe plus or minus 20%. Plus, the market makers and the bots are going to go back in and start flipping through, you know, driving up the miner tip is a possibility. And there's a few models that I've been working to try to present on that meeting to show, you know, if let's say we're burning now 1.8 transaction fee per you know, because now we have a 20% drop in total fee cost, but now we've went +1, +2 on miner tip. From a user experience, I mean, from us, it's a net neutral. From the user experience, it sucks even more. And my whole thing is like, if we could formulate this in a way that made sense, like us as miners, it's great to have opportunity costs go, you know, yield come up. But if it's at the expense of a crappy user experience, which, I mean, I would like to be doing videos right now of explaining a lot of the DeFi functions, and not just the utility of cost. Sorry for the dog. That's what happens with small dogs. You know, if we could get it to where we could have a lot more use of the currency, then like, I think that's more of a value proposition than, you know, high fees. And we would give up, obviously, I think people would be more aligned if it's like, hey, we're going to drop fees to a certain point or have a fixed limit or increase block. size, something that will have a more positive effect on the user usage of it. And then we can start talking some of those effects, cause and effects of lending and all the other things that come with DeFi. I would love to have videos like that. But right now it's like $400 to like mint an NFT. So like, I'm in this weird perspective where we're getting enriched as miners, but the user experience sucks. So, you know, I don't see their game theory piece of that. I'll still open up if you guys want to continue. Let's go back here.
The important part about 15.
Yeah, just
sorry, I talked over somebody. The important part.
Dave, go ahead, please.
Thanks, Seth. The important part about 1559 mechanism is the blocks can never be full, but are essentially never full. And that's why the models generally show that the miner tip gravitates towards zero, because there's always the mechanism targets the blocks being half full, which means as there's always room for your transaction in the block, unless there's a sudden massive spike in the volume of transactions. So you don't need to pay a miner tip to get included. Maybe you need to pay a miner tip to get prioritized where you are in the block, but you're going to get included. And if the fill level of the block starts going above half, then the base fee starts jacking up. So the forced fee rather than the elected fee like we have right now comes into play on the next block and keeps targeting that halfway full point. So that's why most of the modeling shows that miner tip actually very quickly, when there's a change in the level of transaction demand rapidly, that miner tip may apply there, but it very quickly neutralizes because you don't need to pay it to be included in the block.
That was a good clarification, David. I'm glad you brought that up. Seth, go ahead. You were talking.
Oh, just as far as the UX, I mean, so you're talking about arranging deck chairs on the Titanic, so to speak. If we've got a UX that people are no longer attracted to, or that it's definitely not the main event for DeFi any longer. And with what Dave is saying, as far as the clarification on having the block, having that target be about the halfway point for transaction volume, I wonder if still keeping the main thing, right? Ethereum. I wonder if it's in miners' interest to start vetting and trying to figure out what among all of the layer 2 scaling solutions right now is a good place to put support to alleviate transaction volume and ensure that there's still a solid business case for DeFi still being, like Ethereum being the nexus of DeFi operations, right? If that scaling issue results in a more favorable fees without having to implement some wild measure like EIP-1559 and adjusting fee structures that much, then I wonder if placing support there in favor of something that's already working and is already scaling,
like a layer
a la
like
BSC. Sorry to even mention them.
Yeah.
Just to say, Binance Smart Chain right now, they're already riding the coattails of Cosmos, and they are gaining traction so fast because of Cosmos Network's excellent work, right? They're excellent layer for scaling.
Yep, that whole ABCI and Tendermint backend where you're having the interoperability there. I mean, it's good. This is a normal play on any kind of resistance type of issue, and right now the least line of resistance is going to win. I mean, it's if for fees and structure for participants. If they can lock up liquidity at a cheap price, they're going to weigh the two. And I know Ethereum's pushing for this for a better scaling options, obviously with 2.0, but it's going to be kind of like they're going to get stuck with the bag, or they're, it's going to move over because people are looking at functionality over really, quite honestly, decentralization, unfortunately. But they're going to gravitate if they can have those tools and that same kind of effect out there. It is what it is. And there's a couple of solutions out there right now with low cost, right? They're using layer 2. I think I was partially tracking. I know you guys would be able to probably jump in and tell me which one it is right now. It's not 1 inch, but there's another DeFi on-chain layer 2 right now for ETH that's actually cheaper right now. That's getting a lot of popularity too. That's taking advantage of that. And that's using, I think, a more pragmatic approach of fixing the problem than causing this other issue right now of and animosity in the community when it comes to like making another monetary change.
Solve it, right? Or,
The which
yeah,
one?
let other devs solve it, right? With layer 2. I think I agree. One thing I was going to ask if we could lay it out for the chat is a lot of people have questions on timelines as far as a rollout of EIP-1559.
Mhm.
Do you have any idea on a timeline as far as like, I know you have the meeting on Friday. At what point does that, how much closer does that meeting put this to either being voted in or not?
It's actually a good question because right now Berlin moved back 3 weeks, provided on the dev call that was on Friday. So dev call took a list of proposals, EIP proposals, and shifted stuff left that they feel comfortable with. I think there's still some client integrations that are still needing to be done with EIP-1559, but provided that they can, provided this discussion, if this discussion came into where everybody was like, hey, you know what, you've changed my mind, let's ship it, it could come in as quick as 3 months, I would assume, based on Berlin moving back, those few months. So I think with their chart in March or April right now on that Berlin, it's looking like it's going to go London though. Go ahead.
Yeah, they were saying because London's in July.
Yep.
That's when I was seeing if the proposal will be pushed through, it'll be pushed through on London, and that's in July. So it's kind of where that's what I've seen as a timeline wise. I do know that someone in our community on DCA is talking about the proof of stake side, because the flip side of it, which is a good point, and I was going to bring it up here in a little bit, but I don't want to forget it in the chat. The proof of stake situation, all nodes, we all are very aware of this, are going to require hardware. And a lot of people are just going to run it on a VPS because it's going to be easiest. It'll be accessible for multiple people. If a dev team's working on something, they'll all have access to it easily. But if you look at that, that means it's going to be on a VPS for most nodes, and that's going to be a centralized basis. So that's not really good in my standpoint, of trying to keep things decentralized as possible.
Yeah, it's going to be all on cloud services.
Yeah, it's going to suck.
Yeah.
Well, some people will run like they'll run the nodes, they will do it, but a lot of people won't. I know a lot of validators right now are running on VPS right now, so it's I just want to put that out there.
To your point, also, there are going to be so many custodial services as well. I mean, I think the main allure with proof of stake is going to be is for the marginally technical person who just has a lot of ETH lying around, and they don't want to think about any of this at all. They want to hand it either into a multi-sig situation where there's partial custody on the part of somebody else who's setting up that VPS for them. So, to your point, what does Ethereum 2.0 really just mean? Amazon chain? Or AWS chain.
Yeah, I want to have like an entire other call for sure on talking this point because I think it's warranted. I've proposed the question actually to Vitalik a while back on Twitter, saying just my understanding on how the infrastructure works. This is going to be people. It's all about incentive. So the incentive is going to be based on risk, and the incentive where people are not going to want to get slashed. So they're going to go to the least line of resistance of them getting slashed with their stake, especially if ETH pushes to something like $10,000 in coin, and now you're talking $320,000 per node. You're going to pay for an infrastructure, an IT infrastructure that has 5 nines of service, which is like 99.9999 plus, and you've effectively turned it into a federated network across, why it is decentralized, or it's a federated network across GCP, Google Cloud Private, Google Cloud Public, IBM's cloud. It's all going to be ran on commercial infrastructure, which is great for the Azures and the AWSs and all the cloud structures. But now, the ability to censor, the ability to, or if something comes through from a legislative district in another country, that's, they could start locking out nodes, slashing people's setup. I mean, it's not a lot of difference, I guess, when it comes to like somebody can come down and shut down your miner if you have a facility. However, it does centralize a lot of stuff. That's like its own. This entire conversation's its own stream, I think. And I definitely want to do this. And if you guys are up for it, we'll do that.
Something like that, like if they're on a cloud service like AWS goes, hey, no more, America's shut down with their nodes. It's not like somebody coming up to you going, hey, you can't be mining no more, and I can now liquidate my farm. It's now they shut down my node, and now I'm being by the Ethereum network, I'm being penalized because my node's down now. Now I'm actually losing what I've already paid for or what I've already mined.
Yeah, but let's try to wrap this back into 1559. I want to do this 2.0 discussion. I think it's very warranted, for sure. And I mean, from a miner perspective, it's going to be like, oh, old man yells at cloud. Oh, the miners don't like proof of stake. I get it, but like we want to make sure people understand the reality of what's being marketed, and then what is the reality of what's going to happen. And it's not because we say it. It's because of the incentive dynamics that come around with that type of network and that type of behavior, that people are going to do it from a risk perspective, not because miners are telling you this is the way it's going to go. It's literally probably the thing you absolutely should do. I wouldn't tell you not to do it any other way. If I end up staking through proof of stake, which we have not done with Ethereum yet, but let's say it goes live, we're looking at 2 years from now, everything's peachy king, and I'm like, you know what, I got 32 ETH, I'm going to go ahead and stake it. Guess where I'm staking it? Somewhere I don't have to worry about, and I'm using a managed service, right? So that means that I am no longer in control of it. So, you could do it through multi-keys, and there are different other things that you can do to still remain some level of control with regards to somebody's not stealing your money. However, that's obfuscating the whole entire point of, you're reigning the control of that node versus where I can touch my miner. My node's off in a cloud, but we'll have that discussion. We'll switch back to 1559 specifically, around, I'll pivot some of the discussion here of some of the behavior. So one of the things when I'm saying people are going to,
while you're doing that, Mike,
mm-hmm.
can I toss a little wrench at you real fast?
For sure.
I've always got a little bag of wrenches. Dave knows the bag of wrenches. He's seen it firsthand, but to synthesize something that Son of a Tech mentioned before, and this whole talk about proof of stake, pardon my ignorance, and this is where I haven't done enough deep reading on 1559. Is this fee structure being proposed for ETH 2.0 as well for proof of stake? Meaning, when the incentives are applied towards people who just have 32 ETH and want to validate with 32 ETH and be rewarded in these gas fees that way, how do they like it? Have they tried that on for size? Have they modeled that?
It's slated to be a per call gas fee, just like it currently is, which my question was, is EIP-1559 rolling into that per call gas fee? So we know the structure is the same. We don't know that this specific EIP affects it. Does that make sense?
Yeah. So this is a layer one.
And that's kind of what I'm curious about.
Yeah. So this is a layer one ETH1 hard fork, right? So they would have to make a representative example, because ETH2 right now on Beacon Chain is like its own thing. It's its own blockchain. It's not like continuing on with ETH1. They're both run in parallel. And then so they would have to make a representative example of that in ETH2's chain. The question would be, are they going to do that? Have they done that? And is that the way it's going to function mechanically? Moving into ETH2? That's a good question moving forward, and really kind of like truth in advertising, right? For like the folks that are staking are by and large, different than most of the miners. I mean, there are miners that are staking and understand more of the dynamics because they've been the ecosystem upholding the network. But like a lot of the investors and people that are staking that, I don't think are really fully tracking the on a whim, non-schedule related changes in behavior of the way things work. And I would say the leading indicator that is going to be a rude awakening for folks is at some point, and this was brought up, mind you, it's just one developer saying stuff on Twitter, which is like, okay, whatever. But, saying that if we find as a community that it makes sense to decrease the amount of reward that is given to a proof of stake participant, then so be it. And my argument is like, bro, like this is just like you're going to get you guys as you guys federate it more, as people start to federate it more and make it more centralized. Oh, listen to Siri listening in on us, bros. As we start to move to a world where it's federated more, then your attack surface on, you know, suits and everything else start to come up to where, you know, people can start putting court injunctions against the developer level, right? So playing with the monetary system is dangerous. And it's going, when it starts to really impact people through a direct attack vector, where like miners, you can make a change to a miner and a miner can pivot. Also, our equipment can be repointed, right? So we take the hit and we're like, you know what? Cool story. I can go somewhere else, or I can sell the hardware. When you start doing that on the ASIC, which is another attack vector, where somebody has vested interest on a particular algorithm, and as other networks have spun off of that algorithm, ETH is really the only key ETH algorithm now. VTC, Ubik, a lot of these other networks have moved and pivoted their algorithms. So those ASICs and that whole deployed hardware is not going to function on those, right? So now you're directly impacting people's direct interest on that. When you actually do that to where nobody can pivot anywhere, or they can't, you know, restake. I mean, they could sell, right? They can sell out of it, and that you don't want to push people away from you. You want more people. It's going to get into an interesting dynamic if ETH starts playing around with the you know, the monetary system post EIP, you know, the 2.0. But you know, it's going to be very interesting. I think that'd be a good comment. I mean, I'm going to go back through all of our video today and make sure that I'm capturing some of that, and I'll bring that as a question up from some of the folks on there to see if they know that if the fee structure works the same way.
Yeah, because like I adopted a lot of that. I adopted a lot of the E3s early on, and thankfully the E3s can be repurposed and put onto ETC hash. Thank God, because the DAG file's too big now for the E3s. Oh my God, I thought I had doorstops until the patches came out. But I mean, if they would have done this early on, I would have gotten screwed, because you know, I invested so much money. I mean, I had a lot of E3s. I bought batches 1 through 5. You know, and in the last 2 batches took so much longer to ROI because the network saturation at that point. If they would have done this early on, I would be still trying to capture my ROI time on all of my equipment. And on top of that, you know, being a residential miner, it would have taken me even longer because I don't pay industrial power, you know. So by taking some of this incentive fee structure, you're almost pushing it more to the industrialized mechanism for mining too, because they're the only ones that can compete with the electric side.
For sure.
Can I jump in for a second? Hey guys, sorry I was late in the first place. I think that's often one of the arguments we hear, is that we as miners, because we are using mostly GPUs, is that we are not like fully invested in ETH, because we could repurpose, we could resell. And that's often, at least what I hear from ETH, let's say maxis, that the stakers are fully invested while we miners are not, which you guys know is not really true. But that's one of the arguments we often hear.
I'm trying to pull a bunch of questions from the chat. We're getting a lot of people over here. Whenever you guys are ready, I'd like to start getting at least chat involved and start going through some of the questions if possible.
Yeah, for sure, man. Go ahead, and if you got some chat questions, bring them up. Yeah, because I want to make sure we have some. One
is people are concerned right now about the, I guess, projected loss of profit if EIP is implemented. Do you have anything kind of worked out for that? Do you have an idea or any math behind that?
Yeah.
So the spread.
Online, by the way.
Yeah, go ahead.
I was just saying that was the #1 question on mine as well. So that would loop in a lot of the questions I'm getting over here.
Yeah. So the spreadsheet that I had out there, which I'm trying to fix right now, you guys are awesome and blew through my API. My $80 a month API dollar cost in 2 days.
I knew that was going to happen.
So yeah, we're looking at an enterprise solution. It's probably going to end up costing me about $3,000 a month, but we're going to push that up to a couple million per per week API costs, and we're switching it to a site, so it won't be as heavy. I think Google's making a lot more API calls than we should, so we're leaning out our API calls to try to streamline it. But yeah, the spreadsheet was showing kind of cause and effect if we lost transaction fee, and then it showed, I mean, bottom line, it's been averaging around 4 ETH. It's going to drop to 2. So we're going to have roughly yield wise, we'll drop anywhere from 30 to 40%. Pretty much off the gate at, you know, if ETH's 1800. So you're going to see a yield. You're still going to be profitable pretty much on everything, as long as the network growth doesn't get much more over 520 terahash. Then you're going to start hitting ROI. You're going to start hitting just break even on 2 ETH reward with $2,000 ETH price. You're going to be right at break even on like your RX or your R9 like 390s, which, I mean, I can't believe those are still profitable, my dudes. But like the 390s and stuff start to come off the list, right? And then that's at like 520 terahash. If it moves any more north of that, which is going to be pushed by ASICs that are coming out, if it's the A11, if it's the Phoenix, if there's other shadow stuff, it's going to drive it up further, and then you'll just start to see this reciprocate. You're going to see an immediate effect of just the hash rate reducing. So yeah, I mean, 40% is about the hit on you right away. But again, you know, the counterpoint is that the ETH price may go up, and it'll offset it. Again, miner tip, if miner tip goes to +1 ETH per block, it really takes the teeth out of it. With like a $3,000 ETH price, where it's effectively flat, right? $3,000 ETH price plus 1 miner tip, it's the same profitability even at 520 terahash. But again, I'll say the one point, and then we'll take another question. Just because we were having kind of this discussion before, let me bring back to my screen. I will fix this for the next stream to where I don't have to keep going back and forth to the stream view. Is this discussion on the point of freaking mining, and the point of that, where anybody that's talking that they're paying for a certain amount of security and cost of security is nonsensical to me. To where you want the most security possible on your network, you should never question it. It's like safety on a plane. Like, do I want it to fly? Yes, I want it to fly. I don't want it to, you know, like, you know, I think I'm paying a little too much for these seatbelts, or, you know, these air masks, right? Like mining, you want the most force projection, especially on the mining that you can have a lot of diversity in the type of miners, from FPGAs, ASICs, and GPUs on a particular network, that if you have de-incentivized, it's all about the incentive. If you've taken the incentive off of people to mine, because now people are getting less, and now let's say ETH flattens out at like $1,200 for whatever reason, we start getting in a bear market for some reason. And they implement 1559, we're talking ETH terahash will drop, you know, down to 210, 220 terahash. We've seen it already. This isn't me forecasting it or explaining that this is some theoretical. When ETH was $86, which is crazy to me, you know, less than a year and a half ago, right? 2 years ago at the most, the network subsided significantly. We can see that if that's what happens. That's just cause and effect on the incentive. If you're mechanically forcing it to do that, now you have all this potential hash power that if there is somebody that wants to attack it, puts a higher incentive on a brokerage service, something like NiceHash, something that is taking that hash power and giving you a presented attack vector. And I don't think that's really calculated, because it's a matter of force projection of potential. We see that with where the total totality of networks out there. If you take everything from mining pool stats and you look at the different algorithms and you bark those out to what's the hash rates per GPUs, and start to get some kind of rough calculations on the total potential GPU out there. And then let's say NiceHash or one of these brokerage services offer a 2 times incentive for mining, and people are like, hey, you know what? I can make twice the amount on NiceHash. I don't like NiceHash. I might not have that philosophy, but if it's 2 to 3 times factoring, because you either have a state actor or you have a competing chain, I'm not going to call one out, that has put a $30-40 million buy order out there on BTC for hash power, and then attack that network. It does not take nothing but a few minutes, a few block reorgs to have an attack vector that would be detrimental on Ethereum. And by de-incentivizing through some kind of crazy idea that you're paying too much for hash power is nonsensical to me. You want the absolute most hash power possible, and never do any kind of game theory in your brain that you want less, because the ultimate risk on that is an invalidation of your immutability. And I'll open it up from there. I'm on my normal rants.
Yeah, it looks like we're getting to the point, at least in my chat, where we're pulling in people outside of mining, trying to get some perspective. I think you kind of covered it here, as far as the concern being security as well, because a lot of the questions are like, isn't it directly related to the price of Ethereum? And if that's so, and Ethereum keeps going up, then your profitability will be made up there. So that's the primary argument coming, I guess, from outside of the miners' perspective. When they look at it, they just think, oh, well, the miners are going to be fine because the price of ETH is going to go up.
Mm-hmm. Well, yeah, I mean, so that's the inverse. I mean, it is ultimately a math problem, right? If yield is reduced but price is up, right? It ends up from a profitability standpoint for us. We can participate, and it all comes down to, can we participate or not? And if we can participate, great. It's not going to really change anything. It's the same thing that happened in the same argument of every time they've reduced it. And it's still been profitable. So they're like, see, it's still profitable. Well, if it would be worth 5 ETH plus 2 right now, it'd be a lot more profitable, right? So I'm not saying we're being greedy. I'm just saying that the point is the ability, they're resting on the concept of, can we participate or not? And if we can, what's our problem? And my more argument is around, you want the most security possible. So I would make the counter argument of saying, if ETH's reward reduction was never happened at 5, guess what the hash rate would be right now if it was 5 plus 2 plus 5, whatever the transactions fee are. ETH's hash rate would be, because there's going to be a race to the top. You're going to have fabrication and development being retooled in in ASICs. You're going to have people spending big money and trying to buy bit streams for it, right? You're going to have a forced projection of participants because you've let the level get to where it's at because you haven't touched it. And that's effectively what's happened with Bitcoin, right? We're at some crazy number. There's federated networks across the entire world in different countries chasing the one factor that they can adjust, which is their cost, right? And you have this massive distribution with using a lot, what is it like now, past New Zealand's total power consumption, most of it renewable, right? Like, where is the issue in that to compete with those networks? And that's really what my counter argument is like, I don't know what point your folks are trying to make when they're saying that they want to pay less for security, when the leader of the space, being Bitcoin, is showing you how it works with proof of work, and that things shake out and are automatically adjust predicated on the business rules. And it's just playing with the monetary policy that's going to get them in a lot of issue. And I guess my counterpoint before we take another question here is I would say soft warning to the proof of stake meddling, if they start messing with things into proof of stake, that if you're in a more federated, centralized environment by investors out there and you start playing with that, your attack vector is now to where they can actually probably have influence a lot more than just independent miners or pointed pools. Because it's just now you have a person that's making a decision, you have a person a group that's making the execution of that and trying to convince it, and that's an attack surface for somebody that has a lot of investment and a stake. And if you're changing their reward, you're going to get a lot more pushback than just a whole bunch of miners on a YouTube call.
Yeah, I mean, it's like you're talking about changing the rules partway through the game, going, hey, this is what you agreed upon. Now we think it's in our best interest, not yours, to change the rules over here to get the market price up. And then at that point in time, if you get rid of all those fees to support all the miners, let's say all the miners stay on because it's still the most profitable coin out there, and it starts hitting that upper limit of the hash power, it's like, okay, where does Ethereum have to bump up to actually meet the demand of the miners still on a network? If the difficulty gets up, as high as to that that magic number where some of the my 1070s are no longer viable to sit there and mine on Ethereum because I'm making 24, it cost me 24 cents and it's costing me 23 cents. That I'm mining 23 cents and it's costing me 24, so I'm not going to mine at even at a penny loss. I mean, my thing is like I try to double my electric rate plus 10%. That makes, as a business standpoint, that makes the most viable sense, that you're not going to sit there and mine, spend 24 cents to make 10 cents. It doesn't make sense.
Well, yeah, I mean, it depends on, there's different plays. I mean, some larger institutions will pre-bake in 1 year of full cost, right? And that's part of the cost. And then they're looking at the longer term of the appreciation of the coin, right? So it's different with each miner. And bottom line, we as miners, we adjust based on the market dynamics. If the coin gets into a bear market, we retract. People stop mining, and it's nobody's fault. It's the way of the market dynamics, and nobody has to make excuses for it. We are a service provider, and if the service doesn't make sense to provide, a value for us to participate, we step out and we either go to another network that does, or we take a pause on mining, right? I mean, and nobody owes us an explanation. There is no social contract. The social contract is the code that's in the currency that we've made a decision on. And when you meddle with that code, that changes the incentive. You can have all the different opcodes and different functionality, add new features and functionality that drive proposition and value to your currency. But when you start messing with the monetary system, this would be proof of stake or proof of work, right? You're messing with that formula that people have built around, and that's the other part of that discussion. Seth, you were going to say something?
Oh yeah. So just apropos of this most recent thread, I think you brought up Bitcoin, and you brought up Bitcoin as like the gold standard of improving the efficiency and maintaining the incentive for the broadest participation possible in mining for the greatest security of any blockchain. I think one of the difficulties with applying that logic to Ethereum is like now we've reached the point where, because Ethereum is the nexus of DeFi for now, and we might see that flipping very fast, right? Because of this fee problem. It just doesn't do the same things, right? So Omni layer protocol with Bitcoin, how successful was that, or is that now currently? And looking at the way that Bitcoin is secured and having mining be incentivized the way that it is, to essentially functionally become an arms race, right? Where he who has the most efficient ASIC just wins, right? The smallest process, can fit the most hash power onto a single board, whatever else. With Ethereum, I think we're fundamentally running up against conflicting interests and conflicting incentives all over the place. And you started the conversation talking about that issue of UX. What happens when users just say like, yeah, but we don't care anymore? So like, yeah, we want to incentivize a lot of participation. And Matt said earlier, apropos of the question from his stream, like if we have enough to shake out the weak hands of mining in Ethereum and drive efficiency, because the reward is enough. It's enough for people to participate, so only the most efficient stay. Is that actually bad? I think, I'm just going to throw a little counterpoint there. I don't know that it is. I think it probably is a very good thing to drive efficiency ruthlessly right now. And this is not me like playing devil's advocate for 1559, but just that mentality. If efficiency is the goal of the network, because DeFi lives here, and because people will go, like users will go elsewhere if their fees are too high, then I think everybody has to tighten their belt somehow. But maybe EIP 1559 is just like, it's just the wrong way. But if efficiencies aren't, if you don't strive for those efficiencies, then ETH is no longer synonymous with DeFi, and it dies this time next year, before ETH 2.0, before proof of stake even becomes the reality.
Yeah, I think they're gonna. I think it's a great point because it is a race to the top. I think those are built into the dynamics, anyways. That's why I never really take a lot of. I don't really present a lot of ASICs on the channel anymore. But I'm not a hater of ASICs because I think it's part and parcel of what the incentive structure, the way proof of work works is you're going to have, as value goes up, you're going to want to get the most efficient. It's just natural. When a network exceeds because the algorithm is hard enough for an ASIC maker to mint something with like the high memory bus bandwidth, lots of memory. There's a lot of cost in taping it out. Like it's created kind of this saturation to get there. I think over a long period of time, if ETH stayed on there, we would naturally go there because it is what it is, right? It's like the value goes up. People want to get the most efficient, not just in hardware, but in power cost. And you're going to have this arms race to that point. I think that's always the way it's been. I think it's just the algorithm's complex enough and creates enough overhead that we just haven't got there yet with the ASICs, but it's been out for 5 years, right? So, or 6 years now, and we're now getting there with 5 times efficiency on ASICs, right? I mean, it's just taken that long, and part of it's been because of, hey, we're going to proof of stake, and people are not going to take the risk. But now it's like, maybe they will, and so they got it there. But yeah, no, I think it's a great point you brought up there. It's a true perspective, when it comes to mining. I just think that it's front running. The price and the volume is front running so high that it's allowing more people to participate, and that's I believe that's a good thing because it gets the conversation out there, gets people interested in cryptocurrency, and I've always done it from a grassroots type of perspective. But yeah, that's a good thing you brought up there from an understanding standpoint. I heard somebody else try to jump in on that. Was somebody?
I was trying to get a few things handled in chat. We still have
Yep.
the argument essentially that it's about the end users, right? And reducing their fees. From my understanding of EIP-1559, we're just making fees more predictable. We're not necessarily reducing them. The additional fees, the problem that the miners have is the burning of the remaining fees as opposed to being paid out to the miners. And so I wanted to explain that that's the issue for the end users that are currently using, swapping or DeFi or Ethereum in all of its, I guess, forms. That the miners' concern, I think, is primarily based around the burning of the fee. I think, at least.
Correct.
I wanted to clarify that.
Yeah. Just I mean, from anything that gives a more predictable experience, I think is good. I think there's a handful of items in there that are improvements in part of EIP 1555. There's a few kind of outliers that, like when you start talking about miner extractable value and people that can mine, zero transaction blocks, or people that are using other tokens to pay for their fees. I made this comment to the dev core of like, you're putting a lot of resistance and animosity in the system for probably a 1% issue. And that's like, this is just part and parcel of working around developers in general and engineering people where you're trying to solve world hunger on everything. And once you lock into a situation from like, as a previous product owners of things and architect engineering, when it comes to like design, I'm looking for more of the holistic issue, not really trying to go for the 2% kind of issue. And that's why some of the data, one of the other things I'd like to get in the model before the Friday is look how many instances and what cost were transactions within the blocks paid for without transaction fees. So if we're trying to fix a loophole, like I get that, there's potholes sometimes when I drive, and I get the city can't get to the main ones. They're hitting the ones on the highway, right? But like trying to solve all of it through a sweeping action there is adding in a benefit to 1559 to try to make it more malleable for people to use. There's a few UX things I think that are going to be nice, but are they nice to haves right now, or can we just fix this for, without the fee burn, right? Because that's ultimately what impacts us is less participation. Yeah, I think you nailed it whenever you said that it was for the fee burn, but Let's get some other folks in here to have some talk and discussion. I mean,
I'd like to talk, please.
Go ahead, Lee.
Yeah, thanks. Yeah, so one of the things that I'd like to talk about is the velocity of money, specifically with the Ethereum transactions themselves. So specifically comparing the current situation to the proposal, comparing the transaction fee to the base fee and the burden of that base fee. So as a residential miner or a home miner, like a lot of us are, and I'm sure a lot of other people, particularly the ones that watch our channels, of those residential miners, how many of those guys, myself included, I can only speak for myself, but how many of us redeploy our Ethereum back into the Ethereum network? So what I'm saying is, obviously, our mining rewards, we need to take out our costs for our capital costs and also for our electricity costs and things like that. But whatever is left, you know, for me personally, I'm quite a heavy Ethereum user, so I redeploy a lot of those that mined or what I'm extracting from the Ethereum network. I'm kind of redeploying it back onto Ethereum rather than just burning it as a base fee. So I wondered how much or how many other people that would also affect. How many miners are redeploying their Ethereum back into the Ethereum for the good of the Ethereum network versus just extracting it for, you know, paying for their farm or something. So yeah, I think as a residential miner, I think that probably applies to a lot of us guys rather than farms. So I wonder when. Basically, the question is, how many other of you guys, you know, redeploy back to the Ethereum network, or rather than just extract your value? So that this kind of that's the point that I'm trying to make.
It's a valid point. I'm one of those people as well. I redeploy my Ethereum into the DeFi space and dApp sometimes. And the usability of these features is not as crisp as it could be, but I will have to agree with Lee. I'm one of those users.
I have to agree too.
I'm going to chime in also.
Sorry.
No, go ahead, please.
Sorry, yeah, I have to agree too. Like years ago, we could, you know, hodl and sell, and nowadays we can actually use it and do something with the things we mine. And I have to agree 100% with Lee. I think many of us here are liquidity providers. Many have been alpha testers for some of those dApps. So I do agree that there would be something missing, or it's hard to say if it would actually be feelable, but I have to 100% agree.
I mean, I deploy my it's like what I mine. It's like I try to hodl most of it, but a lot of it gets spent because I'm, you know, adding to the farm. So for me, I've spent the electricity, and my reward is I can get more equipment if I could ever get my hands on them. I mean, me and Carter know about the camping trips.
For sure.
I mean, but that's a good thing that most of us are actually using our Ethereum. I mean, rather than just mining and hodling like back in the day, there's real world cases or applications in which we can use the cryptocurrency. It's just the usability of that has diminished because the space, especially the DeFi space, has grown so much. I'm really on the fence with this one. I don't like the direction that it's going. It needs to be amended, so to speak, if this was an amendment to be submitted. But something needs to be done. I'm wondering if we hold this off, if EIP-1559 was held off and delayed, pushing 2.0 back, how much more of an impact it would become in the future. My biggest concern is as a at-home miner is profits and security. And we talked about this before the stream even went live, that Carter was talking about was the security of the network. Say for example, if X amount of the network was, GPUs and ASICs, what would happen to the security of the network? How easily would it be able to, issue vectors and attack and all that stuff? So those are my two primary concerns: profits, the impact of profits, and the security of the network.
Yeah, if I can also just kind of answer Lee's call, at least for members of the call, to respond to Lee's question about who actually uses Ethereum, who's been mining it. I'm another one. I think that any kind of caricature that's made of miners, maybe, hopefully not by the core devs, but any kind of caricature that's made of miners as strictly cashing out all profits that come from mining, I think that's a damaging idea, because a lot of us are stakeholders too. A lot of us, there will be a significant portion of GPU miners or of Ethereum miners who will participate in either shared staking or in full 32 ETH stake. And so, like, yeah, we're as diverse as any other user group in cryptocurrency or DeFi.
My only counterpoint to that is, as miners, it is true that we're going to go mine whatever is more profitable, whether that means that we keep whatever else we're mining or we swap that for Ethereum and use it on the network. The primary incentive is going to be the profitability at the end of the day. So if ETH becomes less profitable due to EIP-1559, more miners will shift off of ETH just by nature.
That's one thing I wanted to talk about that hasn't really been mentioned a lot is right now things are great. Ethereum's going through the roof. What happens when Ethereum isn't doing so great and 1559 gets in? You know, I'm wearing the Raven coin shirt today. As a miner, we have to pay bills. We don't like to do things for free. Ethereum owes us nothing. We owe Ethereum nothing. But if the price of Ethereum does go down, miners are going to go where it is more profitable, because that's, I mean, most of us are here, whether it's holding or, you know, to use the coins that we mine. Well, if before this even comes into play, if Ethereum price drops and people start moving to coins like Raven coin that's rocketing right now, what does that do to the network and the security of the network?
Yeah, I've always told people, and I'll let you go, Crypto Michael, here in a second. I've always told people never feel bad about one taking profit. I mean, it's part. You're not here to, you're not a participant for all things being good. Maybe when a network first starts off, there's a interesting dynamic that occurs with crypto. When a network's first done, it's the promise, it's the risk we take when we first start mining a new proof of work network. But once it's kind of established in there, there is a mechanic that requires you to like be able to pay for your ends and stuff. So never feel bad about that. You're a managed service provider and you're paid by the network, right? And that's what it is. I mean, some people are like, oh, I feel bad if I ever say I have to sell the coin. I'm like, no, dude, like managed service provider, you're paid for your services. But yes, I mean, deploying and using, I think, is another key point. And it's nothing like, hey, if Ethereum does this, you know, we're all going to move. It's purely the dynamics of the way things work, right? Like, if it's less and something is more, people will naturally start to move that hardware over there. That's just called good business sense, right? It's nothing personal, it's business, right? In the same way that they've reduced currency rewards from us, hey, it's just quote unquote business. Now we've challenged why they would do that for less security, but you know, I wouldn't feel bad about, you know, that being that part of the dynamic. But you know, hence why I'm trying to say, you know, if there was the original 5 plus the current transaction fees, which are just part of what it is with any cryptocurrency, adding the transaction fees, you would just get more service providing for it. But yeah, I mean, to make sure that people aren't, you know, especially for the new miners that are in the channel and trying to understand stuff on everybody's that's watching this, you know, it's not, you don't ever feel bad about that. Just what it is. Go ahead, Crypto.
Yeah. So like you know, Wes was saying, like Ethereum, like, you know, they owe us nothing. You know what I mean? Like they could just turn the proof of stake right now, and they can do that. It's their project. They put in the work. They put in the time. Yes, it would suck, you know, for everybody out there. It's mining, of course. But like, we don't owe them anything. They don't owe us a thing. We can always move our hash rate somewhere else. We can always mine something else. It's I try to like put this point in across in the Discord sometimes. You know, people ask this. You know, like, well, what do you do if they go to proof of stake? Well, then you mine something else, or you start utilizing their chain to do the same thing. So it's, you know, you can stake. There are multiple other services where you can earn passive income on your crypto. Like, it's not always about mining. I'm a miner, and that's what I've been trying to broaden this past year, is that it's not just about mining. There is a whole broad and like picture. end of this. But what I kind of see, like you were talking about, if the price tanks, like if we go in half right now, like price drops half, people stop mining like immediately. EIP 1559 comes in, whatever happens, rewards get decreased again, another ice age happens, more people drop off the network. So if that happens and people, we lose 40% rewards off the top whenever it happens. But if 40% of the network drops off, do you really lose 40% of the rewards? It's kind of that standpoint. If there's less competition, you get a bigger slice of the pie. It's how it's always been. So even if the reward drops and everybody leaves the network, or all of a sudden ASICs can't be on the network because they increase the DAG size again just to flaunt everybody. Who knows? Just talking hypothetical, not actually going to happen. But that draws more people off the network. So those that are still loyal to mining, they get paid for their time. Look, what, 2 years ago to a year ago, whenever prices were down, no one was mining Ethereum because it wasn't profitable. Other coins were the most profitable coins, and people still mined Ethereum just because they got more Ethereum. It's not about the dollar value. You're getting more coin. It's not technically less profitable. You're still earning more coin. Still getting more coin than you had yesterday. And if people drop off the network, you earn more coin. That's kind of how it works and how it's always worked. So I don't know. I'm on that fence of just like let it play out. Like someone in the chat was like, if capitalism, just let it play out like it always has. Just kind of let it do it. If you don't believe, go somewhere else. I don't know. It's a bummer.
Mikhail,
can
I respond a little bit to that?
No, of course not.
Okay, awesome. Yeah. Now we've got that out of the way. Here's my opinion anyway, and you will like it. So,
I'm sure I will. I respect
he's like,
you.
hold on. He's like, be gentle. Yeah.
Be rough as you want, buddy. I respect you regardless of the point.
All right, let's keep it PG-13 in here, gentlemen.
I know.
Yeah.
Damn. I was like,
Stop being
Children watch my stream.
I didn't think it was going that way. A lot of us are family men and married, but not to each other. So anyway.
Hey, we just talk about bare naked circuitry.
Yeah. Yeah. Watch me apply the thermal grease. Yeah.
Right.
Yeah.
And we've now entered After Hours stream. No. Adult Swim is starting.
Gives OnlyFans a whole new name, right?
Yeah, we'll have to do one sometime. We'll do maybe a Saturday night stream like that where it's like crypto after dark or something, and we'll or BitsBeTrippin or something like that.
Yeah, right. It's the thing about mining. IT, you got to get the heat off, right? You got to blow off the steam. Number one.
Sure.
All right, come on, shoot me with what's your point of view?
It's just great. I love what you're bringing up as far as it being like such a fluid thing, right? So incentives appear to decrease, and some people shake out, and that decreases the competition, which increases rewards for those who remain, right? But that happens just as people have to start tightening their belts and increase their efficiency. Generally speaking, with Ethereum, the fundamental problem, again, with Ethereum being such a complex ecosystem, is that if you decrease the participation across the board, and you're getting more rewards, right, in the ETH value or maybe in the Satoshi value of some other coin that you're spec mining, but if it doesn't have a future, if it's scaring away users, if the user experience is bad, then your long game is not good, right? Your long-term prospects are not good. It doesn't matter if you have 1,000 or 500,000 coins of a certain type if they never go back over $1 again. Right, like your prospects aren't great, and with this proposal on Ethereum, making the predictability of fees sounds good. It really sounds good. But again, I'm gonna go back to my earliest admonition. If we can find a way to, if we can find winners in the second layer space and allow for the current system to scale, to make the case for miners to be incentivized to continue to participate and for mining and security to scale, then I think that might be the way to go. I love the way that Matt characterized it, right? Essentially threaten the ETH core devs with bringing in other devs, essentially scabs, to fix their shoddy work on scaling. But
So I do have one question as far as all that goes. Oh, now I'm going to draw a blank. In relation to, so let's say 1559 has to go through, but we can modify it. Is modifying it to not burn the fees, but leave the fee cap in place, even a possibility, or is that not something that they would even consider? Like, because as I understand it, there's still a fee cap. So is that possible?
There's a proposal out there to, instead of, so there's a risk if you don't burn the fees with the way 1559 mechanism works, there's an incentive for miners to artificially inflate the fees. They can create a situation where the fee keeps jacking up. That incentive applies most if the fee is awarded to the person who mines the block. There's a proposal that says, let's just take the fees and let's basically average them out over a window of time, so that if I jack up the stuff a block with fake transactions to drive the base fee up, I won't actually get that base fee. All miners will get that base fee. And so the only way that that becomes viable is if there's some kind of, and it costs me money, I leave money on the table to do that. So I'm disincentivized to do that unless all of the miners get together in a cartel and agree to pay each other the money on the back channel. There's some work being done right now to show that that approach is actually safe and that attack risk is low. And then if we just take that base fee and instead of burn it, we just set a rolling average basically of the base fee that goes out. Earnings for miners would be a little bit more stable, but the net earning would be the same over a period of time. Hopefully that takes effect. I think that's the best amendment within 1559 from a miner reward perspective. Two other quick points. One, 1559 in no way whatsoever reduces fees. That is false information that needs to be squashed in the field. Very broadly being misrepresented as reducing fees. It can have at most a very small, very small chance of reducing fees for people who tend to way overbid, but it's not going to reduce average transaction fees in any meaningful way. The second is just that difficulty in general, miner difficulty is going to continue to rise as long as there is incentive to deploy more hardware, as you know, I'm doing, other people are in this chat are doing, etc. In that, the difficulty mechanism handles that automatically. If there was infinite hardware able to be deployed and turned on right now, profitability would go towards close to break even. We've seen it usually about $1 per, call it mining GPU style device, is where it tends to gravitate. The only thing that's holding it high right now is constrained supply and the time it takes to respond to how quickly the price has risen. So you're going to move back over time, you're going to move back towards that normal, and either the ETH price is going to continue to rise, outpacing the ability to deploy hardware, or it's going to go down and create a squeeze. That generally, so you can move to other profitable coins. What we see in price-based moves is usually the market moves somewhat together. There's obviously each coin is unique, prices will move independently, but there's a general theme that the market will move together. So if price drops and that causes a difficulty drop, it doesn't necessarily create an incentive for ETH miners to move to another chain, because that other coin and that other cryptocurrency may have dropped with the entire asset class. 1559 with fee burning creates a very different incentive piece. It causes explicitly ETH rewards to drop while preserving the reward value of all of the other coins and chains out there. That creates a lot more risk of an exodus event in terms of hash power.
Right, and I think that's what I was going to follow up with, was essentially, I'm going to draw blanks. You guys woke me up too early this morning. But I don't know, the reduction, I'll wait, I'm done.
So I mean,
gotta
it's
pull up
like
the notepad again.
Right. It's like at what point in time, you know, does the disincentivization from the mining standpoint hit where the hash rate, the overall hash rate of the network drops down to where they fall to the same victimization that ETC had a bunch of times, because like Carter was saying earlier, they never fixed the issue that Ethash actually has, where ETC hash forked away from it trying to solve this very issue. It's like how far down does the hash rate have to drop before it makes sense to a bad actor to just buy up as much mining hash rate power so that they can implement a 51% attack and actually negatively impact the ETC chain?
Yeah, I mean, I think well, first off, before I try to give at least some theory of an answer to that, David, that first part that you had talked about, is that in an EIP right now? Where's the work being done on that, and is it being presented to where I could bring that up in the call specifically to how they're addressing that other alternative, because that I like the way I was hearing there.
So that alternative is actually in 1559. It's not a separate EIP. It's pretty clear anything that's not actually changing how 1559 works, that responds to this fee drop, any kind of other minor proposals that are out there, has to be a new EIP. In this case, it's in 1559. There is, in the original rough garden analysis, there's analysis of the eye smearing, moving the fee across multiple blocks, and the attack vector. There's work being done right now in the ETH Dev Discord discussion and outside of that discussion to create a paper and create a response to that proposed attack risk, and demonstrate that it's not really an attack risk and that it's mitigatable.
Okay.
So I'm thinking in the next couple of days, I've had some conversations about it with some people today. In the next couple of days, we're going to see that argument made in the form that ETH devs like to see. ETH devs really don't like to see a bunch of just chat blasting bullet points. They want to see a formal argument presented and a formal analysis done. So I think you're going to see that come out in the next couple of days. I think if that can be shown and that can be accepted by the ETH devs, my opinion is that is a much better strategy than some of the other minor proposals, including proposals I've made, that are out there to make broad sweeping changes to the network, to either do an ASIC elimination style change or make a block reward increase and taper off other mechanisms of addressing that security risk that comes with the sharp reward drop associated with 1559. I think those still come into play if that fee smearing can't be implemented safely. But that's the ideal solution from my perspective.
Okay. Great.
David,
No,
that's.
that's.
If I can add to what David was saying.
Yep.
Yeah, definitely that is the most preferred from the miner perspective. When this initially came up about a month and a half ago, Tim Biko had basically said it's too complicated, and I challenged that. And so there's a whole big thing about how complex and easy would this be to incorporate and that type of thing. So I'm glad to hear that there's some work being done to try to counteract that attitude in the dev group, and hopefully we can convince some of the devs that this isn't too complex. It'll be complex, but is it too complex? Because it is the most preferred solution.
Yeah, there was a response given to the complexity, and I think actually a lot of the devs came into agreement that there was a mechanism of implementing it that was actually not too complex and was feasible. So the implementation barrier has been removed. Now it's still just an analysis of, does that create a new attack surface, and can that attack surface be mitigated, or is the proposed attack surface not real when you really get down and analyze it properly?
Can I ask a quick question to David, because I'm pretty sure you might know that. I saw some discussions that they are talking about maybe implementing, or at least taking back up the discussion of EIP-969. Do you know that one? It was about ASIC resistance.
Yeah, I actually wrote that EIP. So I can speak to that. So EIP-969, just to give real quick background, because it has been thrown out. I didn't throw it out, but I actually noticed it get thrown out on Reddit a couple weeks back, and that's where I got involved. At the surface of it, it's a very old EIP. It's back from 2018, before ASICs were even publicly available or announced, and it was designed to stop ASICs from ever proliferating on the network, give the network time to adopt a long-term anti-ASIC strategy. ASIC resistance was a much stronger topic back at that time than it is now, where a lot of users have either dabbled in ASICs or mines have deployed them, et cetera. So from a technical standpoint, 969 can solve the problem if you believe that removing ASICs from the network is a positive thing. It can take the current generation of ASICs, render them ineffective on the ETH network with a small, easy to validate, easy to verify, and test change that could be deployed quickly with 1559. What it does not do is it does not prevent ASICs from ever being able to be built again. And it does not, but it also does not negatively affect, for example, if we rejected 1559 and created a big fight and forced it to never be implemented, that negatively affects the rest of the user base. 969 has no effect on anyone outside of miners. It does create a situation where a class of miners with ASICs gets targeted by it. So it was proposed and put out there as a possible, Ethereum devs don't like the concept of trading with miners and getting something from miners, getting something in exchange for not resisting 1559, but that's really what it is, and let's call a spade a spade. It was proposed as one of the solutions for that. In my mind, from a technical standpoint, it would explicitly prevent the security risk that happens when you have that single chain, Ethereum only sharp drop in rewards at the time 1559 goes live, because you would also remove the ASICs, which would be the most efficient hardware on the network that would be left as the GPUs exited the network. So that's the state of 969. I think there are better options, but it still is an option if the community on the mining side were to gather around it.
Yeah, we had a discussion about this. Actually, David and I had a discussion about this last night, just on going back and forth on Discord. And my main point is that there was a time and a place, and I'm trying to be mindful from the different hats of miners. There was a time and a place where, and I think when it was proposed, is when this needed to occur. E3's already had an exit because they had built them where it was going to dag out. And you had a situation where there was taping out happening with like in a silicon, and if there's any other shadow development that's going on, that was on that. They have a prototype making, but they haven't went into production. And you have this nice little period where the investment cost was coming off of one and the new investment cost wasn't put into another, to where that's the time to do it. That was the time to do it. And now I'm in this weird kind of place to where if people have bought and are waiting for their A10s and their A11s and Phoenixes and F2 pool, which I know is a proponent of 1559, which also happened to also do the review of the Phoenix. I'm not calling that they have any insider into the Phoenix, but they were the ones that were able to test the Phoenix, which means that they have at least participants that are using their pool to deploy those on. So obviously they're going to weigh towards that. Bottom line, capital has been made, development has happened. There is for sure ASICs out on the place, out there. We know there's the A10s, the A11s out there. And now we would be alienating that. I think it would be, it's different than like where XMR has done it before, where there was bit streams, and bit streams can be rewritten for something else, and the FPGAs can be reused, where now you have real capital costs and you're really impacting people. And that are just chasing the same thing we are. So I think, unfortunately, and I know a lot of people are pro ASICs, are not pro ASIC, against ASICs, would be like, no, screw the ASICs, let them burn. It's just, I think at this point right now with 1559, it is what it is. It's a coexistent relationship, and every miner can still participate right now because of the lag time that it takes for the hardware to catch the rapid growth, right? So, I wasn't going to bring it up on that call on Friday as an alternative. I'm much more attached to the work you're doing right now, David, with this other alternative that can get nested in that 1559. I'm glad to hear that it's part within 1559, because anybody that's in development understands that if I introduce something new, I got to go through this whole exercise, which is actually due diligence, to make sure it's been tested. It works on a test net. There's various, unit testing and scenario testing and load testing that's been done with it. If we introduce something now new, it's just going to push everything to the right. Unfortunately, Ethan, a lot of the development is very monolithic, like with the way it has to release. And it's not any hit on ETH. It's just the nature of a decentralized network and trying to coordinate so many independent parties that are building you clients, that are building you different miners, that are doing all these different things. It is a lesson in like distributed development teams right now of like how to try to coordinate and make sure you don't break things, especially that is nested around value creation. We're talking currencies. We're talking things that go up. So, that's where I stand on it with regards to like what you had done before, David, on the efforts that I had been part of with Prog Proof of Work and countless hours of testing GPUs to show, hey, this isn't, because it was the NVIDIA versus AMD discussion at that time, and this is really screwing over AMD, which right now, if you look at Kapow, AMD is doing perfectly fine with Kapow and competing with NVIDIA. NVIDIA, ironically, has not fixed their compute issue yet. I'm surprised they have not done that yet, considering they're building new mining cards, and like is not competing one for AMD architecturally wise right now, with where you have your 1070s running at like 26 mega hash when they used to run 32. Hopefully they end up fixing that for people, but we've put a lot of effort in to try to fix that, and I think that ship is proverbially sailed. So I'll open it up if anybody wants to talk on that part.
I do have a question on the profitability sense of mining. I mean, I get this question a lot, and I'm sure you guys as well get it. A lot of people ask, okay, what will happen after EIP will kick in, like for AMD cards specifically? Now, we know that AMD cards are very Ethereum specific or memory intensive. So do you think, can we be optimistic that a new coin would shine, or a previous coin would go up in price far enough that it's profitable to mine? Like, the main question is just like, can we be optimistic about it or not with the AMD specifically?
Well, that was kind of why I was doing, it wasn't really AMD specific, it was more just in general what my test and why you guys broke the the community broke my Google sheet when I was trying to forecast what would a price have to be to take on, and I used Ravencoin as an example. I've started already the work on doing VTC and Ubik and a few of the other networks just to bring in the same kind of calculations to see what does these other networks have to rise to be able to compensate for any kind of transition. I'm not claiming responsibility that Ravencoin pumped like 30x and it's like a week from that, but the realities is I think that why it won't be a one-to-one probably transfer, that I think there is enough inertia in the mining space that can sometimes front run the opportunity. And what I mean by that is, like, if you've seen in any kind of like new network or any kind of establishment of a new coin that people are excited around, the speculation that comes with that is reinforced by the amount of security that goes to that coin. So like if there's a large amount of hash power that moves with it, it's kind of like a front running. And then part of that narrative is like, hey, this is a really secure, I mean, there's a lot of hash power. Why is it out of balance versus price? And then usually price will come in it because you have that signal to noise from people that are like, why are all the miners moving over to this other coin? I'm already seeing that right now. The Ravencoin network, as an example, again, is up. Its network difficulty is up 5x as of this morning, right? So it quickly filled in that gap of price profitability versus its rise up in 5x in price since a few days ago, right? So like I think that the momentum that a coin gets and then the hash power that switches over to maybe front run even when it's not profitable creates this kind of rolling wave to where I don't think it'll get critical mass to where it's like taking over from an Ethereum standpoint, because there's so many more dynamics into it. But there is this opportunity cost. Sometimes it's no more than a couple week pump, and like mining comes off of it because they ultimately have to pay for costs. But I do think that there is some definite data, and I've been trying to calculate that on the various instances where this has occurred. But we're kind of in unprecedented territory because none of the networks to date have went up, in like a single 3 days, like 3-4x in price. I mean, Ethereum had a pretty good run in October 17, where, it went from 400 to 1200, and then the rise now that it's doing, but nothing has went from short of Bitcoin into the rise that something like Raven and a few of the other ones that are proof of work, mining specific. I know some of the tokens have went up on those X factoring, but you're not mining those. But yeah, I'm optimistic, my dude.
I blame you, Son of a Tech, and Savage Mine, by the way. You guys made Raven coin pump.
Nah.
I claim nothing. No.
I plead the fifth. FIF.
I mean, I was having that discussion the other day, though, because I was like, if you watch any of the trading channels, just by nature of the trading channel saying that a coin is going to pump makes the coin pump. So it's like a very weird responsibility that all of us have, that you need to be very cautious of.
What you say?
Doge to $1, right?
Yeah, I've stayed away. I've stayed away from Doge. We can definitely delve into all kinds of fun stuff and some fun topics. I'll try to, come back, and then we could probably start to wrap some of this up. I want to list. Is there any other? I haven't been obviously trying to moderate and go through. I'm not really watching the chat. If you guys have people that have asked questions, we can also, if we want to, try to do a poll. Because I'm trying to parse in some of I'm going to go to each of everybody's respective channels that have been mining or that have been restreaming this. And I'm going to be pulling all of the comments that come off of that and then pulling those in and taking some of the questions. So let's see if we can get some community feedback. And I guess the first one would be, everybody can put like a 1 in chat if you're for EIP-1559, and we'll let it go for a couple seconds, or 30 seconds, while somebody else can kind of jump in if they had some other stuff to say. I just wanted to get that question out there, and then I'll come in and pull those if you guys are for it. I can see the totality of how many people are in chat, and so I should be able to derive some kind of figure there, and then we'll do it number 2 if you're not for it. If you're for it, like you want it, you're a proponent of it, and then 2 if you don't want EIP-1559. So we're kind of polling the community, and then I'll open it up for 30 seconds or so before we ask another question. So if anybody has any other,
do you want me to throw a straw poll together and just throw it on Twitter? Or
do that. I'll retweet it and I'll use both.
Okay.
And more lines of just, and I mean, people I know are like, oh, polls are like whatever, they could be gamed or whatever, but okay, dude, I'm just trying to get some metrics, just like some basic feedback. I mean, I know a lot of these names that are in these chats, I mean, from years of video, and I mean, I was thinking about extrapolating a little,
I'll share right now.
People that have commented before versus new people, and just kind of get some kind of.
Did you put a straw poll out?
I'm doing it for him real quick, and then I'll just send it to everybody and tag everybody.
Okay.
Are you for or against? And then 1 yes or no. That's what Bit said, so that's what I'm doing.
Yep.
While you guys are going over this, I did have a couple people had questions. I've been looking at stopeip1559.org, and you do see that the mining pools are starting to make announcements of supporting or opposing this. What will we see happen as we get closer towards this time, if we see just as much hash supporting and opposing? Is that going to cause some type of a split? What does that look like hypothetically?
So
really on the opposing list is what I'm looking at. That's pretty massive, isn't it?
Yeah, there's a pretty significant list. So I know that part of that discussion that's going to come up in the Friday call is like, okay, what does the developers do if they push forward with it? How do they de-incentivize pools for not following? If that's letting the difficult bomb, or there's other mechanisms they can use to try to force it. If we all are pointed to a pool, and a pool stays on the chain that doesn't have the right stuff, it will absolutely cause a fork, or a chain split. And we were talking about this before we went live a little bit. There's going to be some interesting dynamics that could be at play with that, where you have a situation where you have like F2 pool that is for it. All the pools are just proxies, right? So if there's miners behind that are pro 1559, it doesn't matter that there's 10 pools on one side that's for it, and then one pool that is against it, and then one pool that's for it, because you could have all those miners redirect to F2 pool, right? So they're just it's like the argument between like UX to the database versus the middleware in an application. Pools are the middleware, right? And miners are essentially the database, right? So like if the decision is at the UX, like people are going to route through what all the ASICs obviously will go to F2 pool, because they have an incentive to reduce the amount of participants, right? Because they're the most efficient. So it would be a very interesting concept if a few pools came out, it went forward, Ethermine and all these ones didn't, and then you have this massive exodus to the pools that actually do it. Yeah, it's going to be an interesting dynamic.
Then you also start talking about the same or similar problems where the pools might not be prepared to take that load, right? Just like Ravencoin wouldn't necessarily be able to be prepared to take all that influx. The servers that are running the pools right now, if a big pool needs to move over that hash rate, it's going to cause issues on their infrastructure.
Or you can even have it where it be the other way around, where it's like everybody starts to look at ETC. A lot of the miners go over to ETC side because it's basically a similar algorithm, so they're not going to lose hash rate wise, and they're not going to lose rewards. Once the devs from Ethereum see, or the developers that are building up top of Ethereum see that the hash rate goes over to ETC, will any of those developers come on over to ETC side, and would you see a profitability margin actually bump up on ETC over time? That's a good idea too. It's like because like I used to support ETC back in the day, and it's like it was a great project. I liked the idea that they stood behind their code, that they didn't do anything wrong, but because all the devs went with all the developers went with Vitalik Buterin, it basically orphaned ETC in the long run.
Yep.
Yeah, I don't know what it would take. I don't know what it would take to get everybody to decide to port their code over to ETC, but that seems like a long shot.
Yeah, it really would be.
On it. And that's the problem we have with Ravencoin too. Like, if we want to be honest about everything, like Ravencoin doesn't have near the amount of deployed apps or anything or development behind it. So, and that directly affects the price of anything that's an application coin, right?
Even the core use case and that their asset layer, looking at the asset explorer, it's fun, but you still get like whatever. It's like oh cool, someone sent me 2 balls tokens on Ravencoin, like.
Or you got Engine Coin versus Steam,
By the way, is that a token, Seth? Where can I invest? I'm joking.
You can invest, and I'll give you my balls. Yes, that's how that works.
And we've devolved again.
So I do have a question that's been posted here in the DCA chat, which I'm kind of curious about what everyone's opinion would be. They say, does their analysis of the implementation risk of EIP-159 include the value of manipulation of smart contracts included in these blocks, or is it just the mining rewards that will be at risk? It's a good point. Is it gonna pose a risk for all smart contracts? I don't know. We haven't seen this. In theory, you would think yes. Like, you know, it would definitely affect them. But I don't know. That's why I asked that, because that is above me. I would think yes. I would love to hear y'all's opinion. I'm sure David, you probably have one. BBT, um, just on a deep dive level.
I mean, at the highest level, if you've got a chain security risk, that chain security risk isn't just about token value. It also is a risk that any smart contract can be undone, or you could do a reorg where you alter the order of some smart contracts execution to essentially front run and take the advantage. So from a overall chain security risk, sure, if the chain gets into a situation where it's a 51% attack is feasible because of a reward drop and a security drop, everything that's running on smart contracts is also affected. From the specific mechanism of 1559 and how it determines fees, I guess you could say there are currently some smart contracts and DeFi strategies to extract value that would no longer be able to be done under 1559. The development argument is those strategies are bugs, not features. But the biggest of those is really the ability to ensure that your transaction is mined in a specific block, in a specific order, by paying off chain for that privilege. Now, under 1559, you have to pay the base fee in Ethereum. And so if you had a mechanism that gamed that opportunity, your opportunity to profit on that goes away. Again, that would be more viewed as closing a loophole than taking away or hurting some explicit strategy that was viewed as legitimate.
David, say it again. There's some new people still doing it. What does 1559 reduce fees?
Absolutely not. Under no circumstances does 1559 have any significant impact on the total fees paid on the network.
But it does reduce the
It's a great
issuance,
point. Thank
right?
you, David, for answering that.
How are the devs viewing this stop EIP-1559.org as far as, like, I see a lot of big pools on the opposing list. And I don't think that the pools on the supporting list can handle the load of the pools on the opposing list. You're talking about Spark Pool, Ethermine, Hivon, 2 miners. I mean, all the large pools appear to be on the opposing list at this point. Or am I reading that wrong?
Is that website accurate? Is that
they have the announcements listed
yeah,
from all of the
it's
pools?
accurate.
Yeah, so Spark Pool
It's
has
accurate
an
of
official
who's actually made the announcement.
yeah.
Because there are a few like large pools, you know, they're like
F2 pool is
BTC.com, Amp Pool, Pool In, like those are big pools, and they're on the supporting side, but there's no announcement. So, I mean, you can say they do.
The only
support it,
announcement
but do you
support.
know?
Yeah, the only announcement for support is F2 pool. And
Correct.
none of those pools are as big as Spark Pool or Ether.
Oh, no,
You
no,
just
no.
take those 2 pools alone, and that's a large amount of the hash rate, and the amount of miners that are going to go through the effort of switching to F2 pool. And even if they do, can F2 pool even handle that load? I don't think they can.
Mm-hmm.
Right.
You guys, Suntech, your mic's down or your camera's down.
Yeah.
Thanks.
There are really 2 reasons why a pool would oppose 1559, and I think it's important to separate those 2. One reason is they oppose the fee burn, which is really them representing the end miners. I think if all of us could choose, we would all choose not to have some of our profits, some of our revenue removed. It's just only logical. If anybody wants to remove some revenue, they can send it my way. That's fine. The other reason that they might oppose it is because maybe that pool does have back channel deals where they're getting paid to include in a currency other than ETH to include transactions. There's another piece there where pools pay out end users. They pay out their rewards, and in a world where every transaction, the fee for every transaction has to be paid in ETH, the cost of sending out those partial rewards, if it's 0.1 ETH or 0.01 ETH or whatever you've got your payout set to, right now pools are able to essentially mine their own blocks and pay almost nothing to send out those rewards if they choose to. They forego the possibility for making money from other transactions, but they save OPEX.
I've seen that.
It's possible that pools might oppose 1559 because now they would have to pay the going rate for a transaction for every single payout they do. And you're going to see, if that happens, you see a side effect where now minimum payouts might go up, right? And that hurts smaller miners, especially ones who need to cover up.
But they already have. They already have on
which
some pools.
Ethermine's already done that. They implemented that like
They
what,
increased
a
the
week
minimum
ago.
payout.
Yeah, minimum payout was 0.05 ETH, and now they have raised it to 0.1. And they say it's to save transaction fees. And I mean, technically it does, but it hurts smaller miners. Like, you know,
Right.
those that are like maybe it's the elusive gamer. You know what I mean? Let me throw that out there.
Got a
You
single
know, and they're
GPU.
only a single GPU, and they're sitting there mining on Ethermine, and now they have to wait a long time because maybe they're not mining all the time. You know, obviously they're turning it off when they go to game. So maybe they're a hardcore gamer and they're gaming 6 to 8 hours of the day. Who knows, even more. And so they're not mining. So their payout takes longer and longer, and it de-incentivizes that person, you know, just by the thought of it.
And to go along with what David said is the fact that they know exactly what the cost is when they do their payouts. It's basically nothing. One is their cost. And so now they will be an unknown. So from a business perspective of them running their business, now they don't know what their cost is. How do they time their payouts? There's just so many more variables that makes it more difficult for them to manage their payouts that they don't have to do now.
Yep.
So also for the question for David, if you know, you've established, thank you for repeating that fees are not decreased, but apparently the goal of EIP 1559 then is to make them more predictable.
Yes.
Do you think it actually succeeds? And if so, does that actually have a net positive benefit, net positive effect on the user experience?
So I've taken a deep look at a lot of the simulations that have been done and studies that have been done on 1559. And look, at the end of the day, all of the theoreticals, you can't prove it until you play it out on the real network. You may not have accounted for modeling every aspect of every potential user, but I do believe that 1559 will improve the consistency and predictability of fees. Now, whether that's really a UX game for the mode user in human count, I'm not convinced. I think it's a experience game for the user in dollar value count that helps DeFi and helps some very sophisticated DeFi players execute their strategies better. And I think that's a lot of the reasons why it's important. And that's not a bad thing, by the way. That encourages use of the chain, encourages growth on the chain. But from an end user perspective, who's just trying to move some ETH around or make some payments, I don't think it has a significant effect.
So I felt like I didn't really articulate the question fully earlier when we were talking about when you answered the previous question. What I wanted to get to as far as the pools are concerned is if all the miners stay on the pools that are opposing, what is the answer? Like what happens to Ethereum other than the fork? So let's say that is the threat. Miners stay on the opposing pools and everybody joins together in that. Because at this point, to me, if I'm looking at this list, it looks like everybody's leaning towards that. Well, how does ETH respond to that? Do you know?
So you're getting into the politics there, which is a dangerous place because there is no ETH, right? There is no Mr. ETH who's the CEO of ETH and makes that decision. But the general expressions that I heard from the devs when when stop EIP 1559 went up and when all the pools went on opposal, the initial attitude was very dismissive. Oh yeah, some pools oppose. Flex pool is kind of an activist pool, you know, whatever. Once the majority of hash rate went over, there was a period of concern and analysis for what attacks the pools could do. And then after they looked at that analysis, the large response was, well, if they dare to do that, we will just accelerate the 2.0 merge and they'll be obsolete anyway. Which I think is a little bit of hubris and not very productive. But that's the general dev view that was at least expressed in the communication channels that I've been around for that. Now,
Well,
more
that's all
likely
I needed to hear.
drives towards compromise.
Yeah. So if I can bring up the maybe just encourage Mike when you're on the call next week with the ETH core devs, based on what David's saying, if they have their hands over the, like, yeah, we will initiate protocol, you know, accelerate ETH 2.0, right? Boom, right? And
if it only worked that way,
right? The launch codes, right? You only need Vitalik and one other person with the keys, right? And they hit the button. Isn't that how it worked in the war room?
Yeah, there's a football that they carry around with them.
Yeah, I mean, I've been on their calls. I know how this works. You can't fool me, Mr. Stanfield. But as far as there being a potential, like, reprisal, right, essentially against the pools and the miners for saying, like, hey, yeah, no, we're not going to stand for it. We're threatening to potentially split. That's why again, pardon my ignorance. That's why I'm still really curious. Do they intend to keep the fee structure this way, essentially just burning fees when it potentially hits the financial interests and incentives of stakers on ETH 2.0? Because I don't think. Yeah.
Go ahead. I did do some digging and checked in with people while we were on this call about that specific question because it came up at the beginning of the call. So two pieces: the fee mechanism in 1559 for determining what fees should be. It's expected that goes exactly as is into 2.0. And while a lot of 2.0 is still very open, right? I don't want to pretend that Michael has talked about at the beginning of this call. There really isn't a concrete plan for how the 2.0 launch merge happens at this point. There's so much still up in the air about 2.0, but the expectation is because they're entering a new system, they can just include that base fee burn as just that's how it is from the beginning and never have any resistance from it.
So we
David going along that same thought, but isn't proof of stake going to increase capacity, thus making fees go down because of the increased capacity and basically bringing us back to where we were, say, the middle of last year when fees weren't really even an issue?
Yes, actually, that's a really, really good point. Under 2.0, you would expect transaction fees, network capacity to be available at a much higher level, and you would expect transaction fees in general to be, a lot of the estimates are about 10x lower than they are now. So that makes the idea of burning the fee much more of a non-event, which was also the case when 1559 was first created. That's why we even have this conflict now, because it was created and theorized in a vacuum where transaction fees were not a significant component of effective miner rewards.
That makes sense.
Yeah, no, those are good points, and I'm glad that you guys have brought that up again, and it gives good content to go back over. You know, in that call on Friday. I want to make sure be mindful of time. This has been a spectacular, David. I'm glad that you were able to join and help provide a technical perspective on the other side too. But I know we lost iMine Blocks there for a second because he had to go, and I want to be mindful. We've been on for a couple hours here. I think this has been an extremely fruitful conversation. I mean, I have so much more that I love to talk about. I don't usually go into rants about this kind of stuff, but I want to be mindful of people's time. And if we need to, I think we should have a post call after, if you guys are up for it. We can talk timing for everybody. I know I kind of just threw this out for everybody that was not tracking. I had mentioned it earlier in the week that we would have a call, and then I kind of dropped it on everybody like last minute. I'm going to try to not do that for the next one. But if you guys have other comments, folks in the chat, I'm going to be going through all those comments. So It's going to be my weekly this week leading up to that discussion to make sure I can get some of your guys' points heard. I didn't know if you guys had any other closing statements. I'm just going to try to wrap us up here. If anybody has anything else, we've had a lot of engagement. I mean, I've looked at some of the other channels. This is kind of what I was doing as you were explaining some stuff, David. And I mean, it looks like we're about 4,000 or 5,000 people across all the different channels watching. That's a pretty high engagement in this space for this niche of a, aspect of it. So, and hopefully we've had some ETH developers on there. That way we don't have to, keep belaboring certain points when we talk on Friday. And I'm going to be trying to make sure that certain parts of this and timestamps of this are made available to the ETH devs to just say, hey, it's been 2 hours, but here's the part that I want you to hear. And then I'll bring that up as a reference. I think that's a much cleaner way to save us some time on the ETH Cath Herder's point, because a lot of these points have been made very articulately. But I wanted to, just kind of put us at a time there. If anybody had any other things to kind of close out with that they want to say as we start to wrap it up.
Just express gratitude. Thanks for putting this together.
Yeah, we definitely need to do it again. Maybe closed sessions, open sessions, whatever you guys decide. I know we're all busy and family men, so we'll just communicate accordingly.
Yeah, I agree. I thank you all for coming out. First of all, I appreciate all of y'all's opinions and thoughts on helping all of our communities. You know what I mean? Like there's multiple people streaming right now, so we're reaching anybody and everybody that we normally do, if not some people, of course, on the same level that watch all of our streams, but there are some that don't. And it's great. I thank all of you and everyone's opinions and questions. That helps.
I put out that poll. So if you guys haven't already voted, I'm tagged prospective channels and individuals so that they can post it out. David, I couldn't get, I don't have you on Twitter, even though we discussed in Discord in the past. But yeah, just make sure you go and vote and check your favorite channels and some of the other people who participated in this conversation.
And I posted that in chat for anybody that's watching on DCA.
So how are you feeling, BitsBeTrippin? Who else besides you, Carter, is going to be in this call on the 26th?
So there's F2 pool, and there's one more. I need to look at the agenda list. I think they were adding one more on there from the miner perspective.
Well, I just saw something this morning, actually. So Chris from Flexpool, I thought was going to be on the call. And then evidently there's been some interest from a major ASIC manufacturer who also wants to be.
Yeah, I've seen that one. I would assume it's probably what they made.
Well, if it's Lindsay or in a Silicon, I'm assuming.
They didn't say.
Yeah.
I would assume it's either between Bitmain or in a Silicon. Those are the ones I could think of that would
because
be big enough to have the reach in.
I mean, this is impacting a lot of things, and that's why the Ethereum devs need to understand the perspectives of everybody to make a full analysis and move, because there's so many different variables and applications and platforms that could be impacted by such a move. And I could be wrong about this, but with the whole conversation of, is EIP-1559 carrying over to ETH 2.0, it's kind of, I know things are still up in the air with that, but it's kind of, I don't have a good word for it, but if you're not going to have the same rules, if you're going to hold somebody to a higher standard than everything else, that's kind of unfair. So if 2.0 is going to come around and they're going to make changes to make sure the validators and whatever it's on that platform at that time is more happy, but not accommodate the miners, that's a little bit unfair. But I know we represent a small part, and I did like a pie chart graph of what we the miners represent compared to the DeFi DApp space and stuff like that. But every voice is important, and if we don't speak or BitsBeTrippin represents us, then we won't get any headway. So it's good that we're having this discussion, so that way Carter can be prepared for the 26th and provide XYZ variables and questions.
And it's like, and I'm fully aware that it's like ETH is going to be going to proof of stake. They're going to fade. Mining on ETH is going to be end of life at some point in time. But it's like as we approach that end of life, it's like our reward for championing ETH over this time, going, hey, ETH is a great platform. it was mostly coming out of the miners giving the awareness of everything, and and we're rewarded with no rewards.
Yeah, I mean, mining's out there, and the rules are what they are, and people can participate or not. There's no social contract. However, it is I call it the immeasurables. And a long time ago, I used to work for Anheuser-Busch. It was like a marketing company that sold beer. And when InBev bought Anheuser-Busch and changed it more to a finance company that sold beer, part of the things that were discussed in the concern with some of the change of the culture was not understanding the grassroots approach that the previous company used to do, where you make friends in business. It's not necessarily about all the product. It's also about the way you present it and the way that you create community building around it from a grassroots standpoint. Mining, by and large, on every single network out there that's a proof of work, creates an ecosystem where you may dabble in mining, you have one-to-many connections to a lot of other people, and those people see that, and then maybe they're the buy. Maybe they're like, you know what, cool story, bro. I'm gonna go ahead and just buy the currency. Now you've created this kind of other person that's out there on the other side of the take, right? So you create this grassroots thing. It's very hard. It's very immeasurable to understand on how big of mining has an impact. I mean, look at all these channels that we have, and we have 5,000 plus across all the channels watching concurrently. We're going to garner together millions of views. Look at ETH Foundation. Look at any of these other Tron Foundation. It doesn't matter. Look at all their other engagement when it comes to not just Twitter, but YouTube or any of that. Look at their scale of engagement versus ours, right? And I've always put this out there as like, we can garner millions of views and awareness of a network, because quite frankly, it's not that their development and DeFi and all that, it doesn't have some kind of perpetual motion of informing people of the network. But people start to figure out, like, how is it upheld? How does it work? And you can see that with coins that have went full, like ASICs, like a Psycoin. Who's talking about Psycoin? Decred, right? I mean, there's a lot of things that used to get talked about from a signal to noise that are kind of now in a vacuum because they've centralized that focus, right, from a mining and ecosystem standpoint. And they don't get near the views. You don't see people sitting there talking about those kind of things that much. It's sometimes dismissed, and it's unfortunate that it's dismissed. But I think over time, we keep collaborating and you talking about the issues and get it known out there for people. People start to understand how mining, affects the system, how it upholds security and that sort of thing. So I've always been kind of beating that drum since 2013, man. More participation is good. I know it hits your yield, but the more people that are in it that understand it, have a more appreciation, and may become development folks, may get into scripting. There's so many other threads that are built out of the base work that mining does, and I'm always going to be beating that drum. So I do thank you guys for all your feedback to help prepare for me. I like Serpent saying that that this is what this is. This allows me to go back through, make sure I'm communicating your guys' perspective as a collective whole, and looking at both sides of the token on that. Here's what happens if we move forward. Here's what happens if we don't move forward, and what the mechanical pieces of that are as a participant. So no, I do value guys. Your input, and yeah, I guess we'll start to wrap this up here now that unless there's anybody else that wants to kind of say one thing, we're gonna
no pressure. No pressure.
No, I live for
this. As we
this.
said on DCA last night, the miners champion.
Yeah, yeah.
You're the miners champion, man.
That's why in the description it says House of Representatives, because
I've got one person on my channel. He's like a question from the home miner,
right,
or the hobbyist miner. It's like, is this like an event that the home miner needs to be thinking about relinquishing all of their hardware at this point, because there's real, I mean, for them at home at 10-12 cents a kilowatt hour, cutting your profits in half, and especially right now, GPUs sales are at an all-time high because the silicon shortage everywhere. It's like, is this a time for them to sit there and think, okay, I might as well sell my hardware and just buy the Ethereum at this point? It's like some of these hobbyists just walk away, and I myself would be like, that's kind of an individual experience almost at that point. And I know Carter said this a bunch of times. Each miner is different.
Yeah, your situation is different. No, it's an unknowable answer.
Right.
You know, it's not like, is the sun going to come up every day, right? We know that for a fact. But you know, and I mean, yes, the super dorky person would say, well, there is a probability that it won't. But you know, things like individual decisions and stuff like that are super predicated on what they feel. That's why we're having this conversation. That's why we're trying to make everybody aware of it, is to understand it's just a variable. You got to calculate this in what the risk is for your particular situation, and you make that decision. So all we can do is provide you with the awareness, have a collaboration of all the different understandings of that perspective, and then they make a calculated decision based on their particular situation. For us to sway somebody on a decision on that, I don't want to say it's irresponsible, but I'm just saying that you can provide your perspective, but like, you know, people need to make their own choice on it. And that's with any kind of risk of anything. It doesn't matter. I mean, it's from getting married to having kids to being a minor or not, right? There's a lot of those kind of, you know, decisions you have to make.
You know, you could, you know, say you're going to put the cost of building a mining rig and you're going to go put that into a trade, and then what if you lose the trade? Like, you're going to be just as upset if you bought mining hardware and then all of a sudden your rewards get cut. So I mean, there is always,
well, at least you have the hardware.
Yeah. The trade, and then what if your gas fees? What if you can't afford gas, or what if you get a rejected transaction? You lose the whole thing because your fees weren't predictable enough.
This entire conversation could be a whole nother video too.
Yeah, but yeah, let's tighten it up, and we'll go ahead and close this out. Again, thanks for you guys joining, and we'll just look for. I'll try to create. You know, I mean, there's so many different ways for us to connect. I hit some of you guys on Twitter, hit some of you guys on Discord. We'll coordinate a better on the next round. I'll fix my streaming setup to where my stream is clean for this next one. But yeah, thanks for your guys' participation in this. And yeah, I'll try to go and represent this information in the best way possible. And awesome. Thanks again, guys, for joining.
Thanks, Carter, and thanks for going out there.
Appreciate it, man.
Yeah, thanks everybody for what you do.
I'll see you next Tuesday.
You represent the small to mid-scale miners, man. Take care of yourself.
All right,
Thank you
my
guys
dudes.
very much. Thank you.